Thank you, obrigado, Angelica. Fantastic to this moment to be moderating this panel. About half a year or 9 months ago, this idea of bringing the Impact Investing Conference to St. Gallen, to the university, emerged, and I think, Angelica, you have done an amazing job actually to bring it here. So one round of applause already for that. And I have to say, it's near and dear to my heart. I've been doing my dissertation on impact investing here in St. Gallen for 5 years, and just looking around and seeing so many people interested now in the topic, I didn't know that was possible at that time, so really, really cool. So I have the pleasure to be speaking with the panel here on impact investing in banking and finance. And we thought of doing that from 3 perspectives mainly. So on the one hand, retail banking, on the other hand, in private wealth, and on the third hand, then on institutional investing. And well, that was the idea to put it together. We only have 45 minutes, if I'm correctly informed, so we want to jump right into it. But we will keep it very interactive. So after a brief introduction by each one of the panelists, I would open it up to you already, not in the end, but already, to understand what you as an audience would be interested to hear once you know who's on stage here. So start thinking already. Just brief intro to myself, Christoph Birkholz. I did my PhD here in St. Gallen. On the side, co-founded Impact Hub, basically a community center, incubator for entrepreneurs, social entrepreneurs, but also tech entrepreneurs in Zurich, and part of a global network. That's from my side. Now to the speaker. And we have Fernanda, Fernanda Camargo. You started in finance industry at the age of 16 with your first internship.
Okay. Yes, I went to the market for survival. It's true. I went to a brokerage house. I was still in my last years of school. And right after, I went to Merrill Lynch and then Deutsche Bank. And was finally when I've heard about St. Gallen, because the whole board was from St. Gallen. And I said, so everybody that studies in St. Gallen goes to banking. So I hope this changes now. And yes, I've been in the industry for a long time. I've been always I was working in the treasury department, treasury desk, trading. And in 2002, I moved to the wealth management business and started managing wealth for the ultra high net worth families in Brazil. And the name of the company is named after my partner who died, Wright, and which, he taught me a lot, so I thought I should name the company after him. So the idea to start Wright Capital was, we are always talking about impact as if it's a separate business. And I wanted it to be intrinsic, to be treated as an asset class, as one thing. So when I had the idea to start Wright Capital, I was looking into starting a wealth management company in one side and the other side an impact company. But there was no way I could pay for people to come to the impact side. We couldn't pay the salaries, and because impact, the projects are so small and the fees. So I was like, what are we going to do? So the decision was, okay, we will only talk to families that believe in social transformation, in impact investment. And so if the family wants us to do wealth management for them, they would have to invest at least 1% in impact. And so in the beginning I thought I would have no clients. And but the good news is the company started this year, and we are reaching 1 billion already. And some of the clients are interested in investing much more than 1%. So I will tell the story later.
And then, to the question, what does impact mean, or impact investing mean for your job? It's about everything, probably.
Yeah, we didn't want to be so strict and to say, oh, we're only investing in on impact, and these companies, if it's profit first, if it's impact first, we didn't want to rule that. We want the families to know that they should not only do philanthropy, they should do a little bit more, you know, look at it as an investment. So this is, and we treat it same way as we go to do a due diligence in a hedge fund. The due diligence process in the impact funds will be the same.
Thank you. And then to your left, Martin. Martin, you are the CEO of Alternative Bank Schweiz, Alternative Bank Switzerland, but you are not an original banker in a way. You came out of development finance and you came out of St. Gallen University. Just a few words to you, and then also the same question in a way, what does impact investing mean in your job today?
Mm-hmm. Well, I think you already said a lot about me. I left this university in 1989, so a very, very long time ago, but it's always a pleasure to be back up here on the mountain of St. Gallen. I was indeed working for a short time in the private sector, then I went into development finance, was working for the State Secretariat for Economic Affairs, for some time also with the World Bank. And eventually I actually went into fair trade. So that was a really interesting switch, because suddenly, after working for a very long time with macroeconomic topics, I switched into the world of microeconomy, and I learned a lot about farmers in Guatemala, Nicaragua, and other places. That was really fascinating. And since 3 years, I'm with Alternative Bank Switzerland. A couple of words on Alternative Bank Switzerland. We are we're not really primarily an impact investing bank. We call ourselves a value-based bank, which has a social and environmental focus on its lending and its wealth management activities. We're a retail bank. Today we service about 30,000 clients in Switzerland. We have a balance sheet of about 1.6 billion Swiss francs. And I think what's really important to understand is that we weren't just created by design, but we were really actually the outcome of a social movement which was established in the 1980s in Switzerland to establish a new banking model, an alternative banking model in Switzerland. And when we started 25 years ago, people were very skeptical, you know, what is this? This is some leftist little strange thing here. They probably will not survive very long. And here we are, we're still around. And as a matter of fact, we had our best year last year, best financial year. We had about almost 15% growth. And what I can see is that today the time is ripe for this kind of banking model in Switzerland.
And I'm sure there are a few other banks in Switzerland that would love to say that about their last year performance. Speaking of St. Gallen graduates, Tobias, you are also one of them. You started your first startup during your studies already, and then probably a world trip was one of the pivotal events or so that led to SUSI Partners. Tell us about you.
Yeah, so good afternoon from my side. As you said, and I repeat myself for those who have been there already this morning. The only thing in a brief message I can say is whenever you have the time to think what you want to do, take the time. So I took 2 years, I was traveling for 2 years, and I came up with what do I want to do? I want to build a company again. I want to do something scalable because my first company has not been really scalable. And thirdly, I want to do something with an impact. So now we are already at the impact part. I founded SUSI Partners. SUSI stands for Sustainable SUSI Investments. And what we do is we finance infrastructure in the context of the energy transition. We currently have 3 funds just opening or preparing the fourth one. What we finance here is wind parks, solar parks, but also upgrades in energy efficiency of existing infrastructure. This turns out to be an enormous growth field, and we are the global market leader with a 300 million fund. Can you believe it? It's amazing. And there I'm quite sure that in 5 years from now we will talk about many funds investing billions in energy efficiency upgrades. It's a super nice business model with only win-win-wins. Yeah. You renovate this university and you get back your money from the savings, basically. And the only thing which is needed is somebody who finds this off balance sheet. That's us doing it, because of course the university doesn't have a budget for something like this. Goes also for any kind of industry or cities and so on. Now, quickly about impact. For us, we are an impact investor, and that's important for the company from the inside out. It's important for my employees. I would say that every one of my 35 employees is with the company because we have a mission, because he or she likes to be part of this company because of what we do. We say that every single investment we do must save CO2 in a measurable fashion, otherwise we don't invest. If I go to the outside, our investors, our pension funds, insurance companies, some family office, some foundations, some churches even, 80% say, oh, that's nice to have that you have impact, but not important. More important, risk, return, correlation, liquidity, which is understandable because that's the job description of a pension fund manager. I was very wrong about that when I founded the company 5 years ago. There I thought, wow, we are the first ones who really have a measurable impact. Now it's on my page 27, I said it this morning already. We hope that more and more institutional investors will find it important, but if we are realistic right now, for most of them it's not so important. What I see is that in the Netherlands and in Finland, investors start to look at it more closely. Switzerland, Germany, very few institutionals really take a lot of care about it.
Inside-out perspective, is it the same how you would describe it with an alternative bank for employees and clients, or how is it?
Yes, absolutely. I mean, we were founded to do good. I mean, for example, 13% of our loan portfolio is renewable energy as well, and about 40% is, for example, affordable housing. So it's within our statutes, it's in our mission, it's in our strategy, and I think the point Tobias just raised, I think, is really important. We are a bank which is not pursuing profit maximization, because as soon as you pursue profit maximization and you come to the point where you have to decide between profit and impact, well, you go for the profit. That's usually typically what happens. And we observe that as well with a lot of institutional investors, but I also see a change to some degree that some are starting to think differently and say, okay, you know what? This is actually really interesting. We're willing to forfeit some of our profit, but we're going to have an impact. So I think that's really, for me, a key issue, why we have been able to offer a credible solution to being an alternative bank. By not pursuing profit maximization, it leaves us the room to really say we need to have enough profit so we can survive, but after that, we want to maximize our impact or our sustainability.
So, please, I was.
Sorry. I mean, I perfectly understand this. I must say that I exactly explain the opposite to my investors. I tell them, look, we have impact and you make more money with it. I would never invest in something which makes less money because of, it's sustainable. We say, yes, you can make a very decent return and your risk is much lower. And I would even hope that in the future more and more investors understand it that way. They said, oh yes, we invest in sustainable causes because I make this easy example, we don't want to be a BP shareholder and then an oil field explodes and then my profit goes down.
I just want to respond to that. I think it's very true. We're in the middle of the discussion already, as you can see. It's our observation in the renewable energy field that's indeed, typically you can combine the two. But the point is you can't combine it always. And I've made the experience also in my previous jobs that as soon as you can't combine the two, and where actually sustainability costs, and there are situations depending on the sectors, etc., where you will have to forfeit some of the profit, very often, especially pension funds, they have difficulty justifying that towards their members. And I can understand that as well. So I think there really needs to be still a discussion about that. And I think we need to be careful not always to say, well, automatically by being in the sustainable or in the impact investing field, you'll also be able to make a profit. It's not always like that. Sometimes it is, sometimes it isn't.
And speaking about the job profile of institutional investors, yes, maybe they have to also serve their stakeholders, the ones that have their pensions in there, that are not only financial profits in a way. And we see a couple of trends also in that case, right? You spoke about other countries where that becomes a question. But we are in service of you as an audience. So you've heard what we have here, 3 perspectives basically on finance and banking and an impact investing perspective on it. So what are the topics that would interest you right now? You know, I can go through a whole list of questions for the next 2 hours here. We've had some briefing calls on that. But what would you want to hear? What would you want to touch upon from us now?
How Charles Liederkirk from Soul Capital. How receptive are investors today to the theme of resource efficiency, resource scarcity? We know that impact is good for sustainability purposes, but what does it actually mean for traditional business models that need to shift out of the way they do business and shift into something that's happening tomorrow? And is the urgent need to transition from one business model to another something that investors take into account?
Anyone wants to pick up right now?
Oh, I thought you were asking him because it's okay. Well, in my case, it's difficult because at the moment the families in Brazil are still learning about that. You know, even this sustainability bond that we've heard this morning, this is new for them. I think all the banks mention that, but this is new. And as you said, it's hard to change short-term returns for long-term returns. So the way I put it to the families is that many times when the families sold the business and they want to keep together, money doesn't unite them, but a purpose does. And what happens is that sometimes we are bringing in purpose to families and they choose one project and from then on, they will work on it. And then the financial return doesn't matter in the short term, it will matter in the long term. But it is hard. Some investors come and they say, well, you know, I already pay taxes, I generate jobs, you know, and I want my money to yield more than the CDI rate in Brazil. And then these guys are harder to convince.
Maybe one thing I can add on it, it's like there is companies like Wright and so on, maybe you have heard of them. What they do is they start calculating the potential negative impact of, you know, bad news, basically. Bad news connection with, you know, oil fields burning, with global warming and whatever. And what I find, I mean, it's a friend of mine who founded the company. They get more and more institutional investors paying them to get these ratings because they say, well, yes, we invest in shares and we invest in any kind of funds going to the old economy business, yeah. But we want to know what kind of risk exposure we have because of resource scarcity and so on. So I think there is a movement. People start to inform themselves. But what you also have to see, and as you said, for the family office, it's very, very difficult for a pension fund manager to really understand what's going on. So, and then now this is a big critic I have. You know, these people want to be taken by the hand, but unfortunately not by us fund managers, but by consultants. And let's be honest, I know the Swiss consultants, there is some great ones, but there is also some large ones which are really old-fashioned. Yeah? And we spoke with them once and they said, yeah, we like your idea, but it's far too innovative. And so if you're taken, you know, if you're a pension fund manager and you're taken by the hand by somebody who tells you, don't go to anything which is new, stay with the old, it's very difficult, I guess. So there I would say work needs to be done on the information side, regulatory and information side.
We'll have later the question also the role of St. Gallen University for graduates, many of them moving into, and you've been a consultant, so you can say that. Yeah.
Well, I was a strategy consultant, that's a different thing.
Okay, further points, please. That's your chance to interact. Ah, there we go. Please.
Well, I do have a question for Tobias. The business model, as you describe it, I think it's like a triage. You offer, you're the financing partner. You have the school or some building which needs energy efficiency, and then you have the companies like Siemens, GE offering it. So when you call yourself an impact investor, one of the other partners, like Siemens, could also be called an impact investor.
I would call them impact enabler.
Okay.
I mean,
and the question is more, I mean, how large can you do this, or in which dimension you can take impact investing? I have nothing against profit. I think it is good. Even if you make more, it's also fine, because, but there is also a lot of people that ride on this wave on impact investing. And this is because it is such a big word, and it can also be used like a marketing strategy.
Yeah. And let's be honest, I use it as a marketing strategy, but not very successful. The point really is, what I try to do here is to be an impact investor with my investors not really knowing that they are investing in impact. I convince the pension funds and insurance companies the tons of CO2 they can save. I convince them with, you get a safe 5% annual distribution with an investment grade risk. For the energy efficiency topic, we don't even calculate about the CO2 certificates. We measure it, but let's say the CO2 certificate price is so low that you cannot do much right now with it. Maybe in the future there is an upside, but we don't calculate for that upside right now.
How's that on the retail customer side? Because I mean, I come from Bochum, where one of the German social banks is headquartered, and they market heavily, basically, with the trend of where does my money go, what is done with my money. How do you see that?
Well, I should maybe quick explain the difference between a retail bank and, for example, an investment fund. We deal with retail clients, obviously, and those are so-called unqualified investors. So essentially it means that we're very limited in the kind of risk that we can offer them on an investment advice or in our wealth management services. On the other hand, the bank itself can be looked at as a trustee of the money of the depositors, of the people who open bank accounts with us, and then we try to take responsibility for that money and do something sensible with it. And we are accountable for what we do with that money by publishing every single loan we give. You can go into our annual report and you get a list of every single loan we make. We have a way of classifying the loans according to what topic we're trying to address. And we've even been the first bank to, last year we've issued, this year, sorry, we've issued an impact assessment on a particular sector, which actually is renewable energy, what our impact has been. So we're really trying to be accountable for what we do, because I think that's the only way we can, as a retail bank, actually bring impact investing to retail clients. Now, I agree, I find it very tricky using impact investing as a marketing tool. I believe the best way of doing it is by being extremely transparent, but since most banks, especially here in Switzerland, are not very transparent, that limits the credibility possibly of the business model they then can carry out. And I think it's a different issue if you are working with high net worth individuals where you have one-on-one transactions and you can go back to the investor and tell him or her, this is what we've done, this is the impact we've done. In our case, we have to communicate with all our 30,000 depositors and explain to them on a broader scale what our loan portfolio consists of, so that they can decide, is this a bank we want to support and where we want to put our money in.
Thank you. We had another.
Yeah. How do impact investors generally factor in geographical considerations? And I'm asking geographical considerations, and I'm asking this because in the company I work for, we are focused more on environmental impact, and this can happen anywhere in the world. Whereas I get a feeling that most impact investors look immediately at developing countries.
Well, in my case, the investors, they look into Brazil. That's it. He was asking me, and it's very hard to ask a Brazilian with all the issues we have in Brazil now, which is, climate and everything, to look abroad. But I've seen firms that, they look globally, and so completely different. And then they work with foundation money. It's different. But with private investors, I think some will be more local, at least in Brazil.
Well, I followed one case of an impact investing company trying to raise a global fund for impact investing, and it was very difficult to find investors in the kind of venture capital private equity space to finance, to fundraise globally for issues, because investors are there in that field. Brazilian focused, Eastern African focused, or even Eastern Europe focused, but they have a focus in a way. So it's difficult to go globally there.
There's a good trick you can use. So we also said, okay, we have now our second renewable fund. The first was successful. It was only in Western Europe. We would like to get a bit more international exposure, especially because we plan a third one going global. So what we did, we said, we copied a successful strategy of the first fund, but we have a small pocket where we could invest in other countries. With other countries, the example I give is Poland. There was, oh yeah, Poland, yeah, makes sense. It's nowhere written that I couldn't do Brazil, for example. And so with these little steps, yeah, you can convince investors. And the important thing is maybe you convince the, in my case, the pension fund manager, but you need to know that he needs to convince his board. And so what you need to find is a way that he can communicate on to the board. And so he can go and say, oh, this fund invests 80% in Western Europe. Full stop. If he would say this fund invests 20% in Africa, people say, in Africa, no, very difficult. Yeah? So it's a language thing at the end of the day. And you need to use a language where you know that your client can sell it on to his board.
Last one from that round, and then we...
Just to this pension fund, because in relation to what you say, if I went today to a pension fund, now couldn't you tell them, hey, when you guarantee your members a pension in 30, 40 years, you know, an annuity of whatever, $2,000, $3,000 or euros, but maybe that will be in a world, you know, where climate change has given us continuous natural disaster, where not taking care of social issues, of education has give us, you know, social unrest, millions of migrants. I mean, you can depict a pretty, you know, apocalyptic world. They have their annuity, yes. Okay, but I mean, you know, no decent place to live anymore. No? I mean, wouldn't that be? Have you tried that argument at all? Or
just a brief answer, and maybe you can add on that. Yes, we tried, and no, it does not work very well. So in Switzerland, you have the Nest pension fund, for example. They take care of these arguments. So they really said, look, we do an impact assessment of every investment we do. And we communicate this to our investors actively. But what I have seen when we look a bit globally in the market, in America now, the teachers, I mean, the people who pay money into this, one of the largest funds in the world, they went there and said, we want that you invest sustainable now. And so now something has to happen. But it needs to come from the basis, and let's be honest, in Switzerland, the sensibility is not there. And maybe it's coming slowly, as we see it now in the Netherlands. It's coming via the state. The state said, we have a recommendation that pension funds build up a 5% and then later a 10% stock in sustainable assets, at least shares. It was not a rule, it was just a recommendation, but it already put something in motion. In Switzerland, we are not yet there, I think.
Two things. One, in Brazil, there is a new regulation in the central bank just now. It's not enforceable yet, but it's recommended that when pension funds or funds, when they invest in counterparties, that they look to see if these counterparties follow certain sustainability rules. So this is a start already, so central bank is already looking into that. And the other thing is, the only company I've seen, I've been very new to this world, but the only company I've seen that works globally is a company called Imprint Capital in the States. And these guys, they manage money for foundations, and it's great because you get there and you say, oh, I want to invest in Africa, in Asia, in India, in climate or education, and they would have the whole asset allocation package for you. But that's the only company I've seen. Maybe there are others. I don't know.
If the change has to come from the bottom, from the people in a way, with Alternative Bank Switzerland, do you see that as a risk, as a reason of why clients come to you, saying, okay, the potential state of the world, and we want our private money? Is that? Do you know the reasons?
Yeah. Yes, that's the number one driver, and absolutely, I think if you look at the Swiss market, I totally agree with Tobias. Sometimes it's appalling how little the Swiss are sensitized to these issues. And if you look at the market on the far left, you have the dark green, as we call them, and then on the right, you have the people who really don't give a damn about sustainability, about impact. Then we start at that end of the spectrum, and we really feel that in the last couple of years, there's been a huge shift in perception. So I think something is happening. I think the perception is changing. In Switzerland, there's not just Nest, which happens to actually also be our pension plan and the largest investor in ABS, but there's a couple of other pension plans which are focusing on that, Corpora, Abendroth. So I think that the world is slowly changing. The perception is there. What I always find fascinating is as soon as people hear about our bank, they're thrilled and they say, oh, we never knew that this exists. So I think we're in a good place at the moment.
Thank you, and I want to move actually to this question. We don't have much time left, but we understand a little bit now about the state of impact investing, which arguments you use, how you use workarounds, basically. Where do you see it moving within your perspective? You already gave a few hints, I think. Whoever wants to start, starts. Where do you see it moving with regards to institutional money, with regards to private wealth, and with regards to retail banking, impact investing?
Lady first.
He wants more time to think.
Okay, where do I see this moving? I think there are two perspectives. One is I can sit and wait, and the other one is I have to every day go and talk to families and make them aware. I think this is already happening, and the environment, with the help of Antonio and Maria and the people who started this in Brazil, the environment is starting to develop. You have the regulators starting to look at that in a different manner. You have, this will be major when the regulators make, the life easy for impact investment, and the families will be able to, I want to invest in equity or debt or, or a fund. It will be easy. Today, it's more complicated. So I think this is, I see it in the future, this will improve if regulation improves. And also in Brazil, if we have the taxes on wealth, which is the subject of the day now. Maybe people start donating more, or because they will be taxed anyways. It will be more similar to the States, where people are incentivized to invest in impact or donate more because it goes to taxes in the end. So things are changing.
So let me spread a bit of optimism. I think we have a pretty unique chance right now with this low interest environment. There is a lot of money available which doesn't know where to go right now. So the question is, where do we find enough products, and where do we find structures which allow this money to be invested in sustainable, in impact topics? And I'm thinking here of course, our topic, infrastructure against climate change, but also social infrastructure. You don't need to deliver a lot of return. Money is cheap. If you can deliver 3.75% return, which is kind of safe, you get investors for that. And so what I think right now, the call is really on those guys who can structure products. What we did, for example, we said, there is a lot of German pension funds that like to invest in renewables. Unfortunately, they have already done a lot, and they have pockets. So these pockets might be, filled up to the limit of, let's say, 10% alternatives or something like that. They would have different pockets. How can we structure our products that they fit in another pocket? So what we did, for example, we did a securitization, German Namensschuldverschreibung. It's nothing different than our normal fund, but you can book it as an asset-backed security. And that asset-backed security is a pocket of 7.5% with the German pension funds, and we get a good run on that right now. And so I hope that many more fund managers, or maybe potential fund managers sitting here, dare to go out right now and say, okay, what products does it need that the investors can invest in these topics? Money is available, returns are low once again. So I think we have a pretty unique chance to go into these topics. And unfortunately, I think that this interest rate will keep for quite a while low. So yeah, let's use this chance and get things done here.
Just the interest rates in Brazil are very high. it's 12.5%. So yeah.
So invest in Brazil.
Actually, in our case, we're very much challenged by the interest rate environment in Switzerland, because what it means is, like Tobias said, money is accessible almost to anyone who wants to do something, as long as it's a bankable project. Now, our challenge is how you're working with qualified investors primarily. I'm working with unqualified investors, meaning I cannot do the same things that you might be able to do with your funds. And that's where the regulator comes in. We also have a big issue with the regulator. The regulation today prohibits that we offer certain products to these clients. Secondly, I believe that today, at least in the current interest rate environment, we don't necessarily need to do that much lending in Switzerland anymore. We should think about where we can put the money, where it actually can have an impact or a greater impact than in Switzerland, because there's so much money in Switzerland right now. But again, there's the challenge of managing those risks, and that's where we're actually. Alternative Bank Switzerland is member of the Global Alliance on Banking for Values, which is a global network of value-based banks. And we're looking into possibilities of cooperating with development finance institutions to mitigate those risks, so that it would allow us to actually transfer money from cash-rich places to cash-strapped places where we can actually have a greater impact, because there's no point in having even more lending here in Switzerland when actually the lending requirements are bigger somewhere else.
Thank you, and for time reasons we will have to come to an end, I think, more or less. I will ask you one final question with regards to, we are here at the University St. Gallen. What is your wish to the University of St. Gallen when it comes to impact investing? Because I think we can give it back here. There's students in here, there's professors in here, and to address a wish. Before we start, just one point that we hear repeatedly is the matter of regulation, right? And how regulation needs to change for that, or maybe even adapt to what's happening already. How many regulators are in here? Who's working on policy? Well, there's one. Yeah, working on policy design. Maybe doing research on policy. Now we research on policy. Yeah. So I think for next year impact investing conference, thinking about regulations and thinking about inviting researchers working on policy and also advising on policy, I think is also quite important.
Yeah, I work for the Central Bank of Brazil, and I'm an attorney there, so I don't work in the regulation department yet. But we are more concerned about risk management, social and environmental risk management. For now, we have already the first regulation, and I hope we have new rules regarding impact investing in the future.
Perfect. So the wish to the regulators, now the wish to the University St. Gallen.
Well, I was talking to Professor Omid yesterday. I don't know if he's still here, but I said I was very happy that things like that were happening inside the university. And if you guys go to big institutions or big banks, I think there is where you can make the biggest change. So if you inspire people right now, and when they move forward, I think this is where the big change will happen, so that they can look beyond just profitability, and they look to human beings. That's it.
Very often when I talk to mainstream or conventional bankers, I hear the argument, well, all the banks do is, they intermediate, they're value neutral. And I don't believe that. I think as a bank, you're always sitting on a huge pile of money and you have responsibility. And I think that needs to be recognized by the university curriculum, especially in banking and finance, that money is not value neutral, but that there's an ethical dimension, there's a sustainability dimension, there's an impact dimension, and bankers, and there's, by the way, also within the ethical dimension, the issue of profit maximization, which is even more problematic in banking than in the real economy. It's actually very problematic because it creates these incentives that when you look at a bank as a pure business that can maximize its profit, well, you're not going to sell what's good for the client, you're going to sell the services that are good for the bank. So I think we need to bring that into the curriculum. I think there's the University of Zurich actually is quite successful in doing that. Professor Schene, they're moving into that direction. I don't know how far St. Gallen is in that respect, but I would hope that those dimensions are being picked up also here in St. Gallen in the future.
Yeah, and I just can follow on that. I think the problem with a conference like this is you're convincing the convinced. People who come to an impact investing conference normally already like impact investing quite a lot. So maybe what the university could do was, as you suggested, build in every curriculum, you know, the point of what is impact investing actually. And maybe, you know, as a bit of a challenge, you could organize some podiums with the typical shareholder value professor against maybe some people who come more from the impact investing corner, practitioners as well. So this, I think there is a big advantage of impact investing. So I would say it's better than normal investing. But I think, you know, in order to carry it out, everybody who is not going to the impact investing conference already anyway needs to be confronted with the topic.
Thank you for the call for action. I hope some people noted down what's gonna be on the agenda for the next 12 months. But we had a rather positive opinion, I think, also on the developments. I mean, it's right. It's in many cases on those conferences preaching to the choir in a way. But it's not always that positive, and I think that changes. I mean, having followed that from the last 5 years, I think the more critical voices, the more voices of marginalizing that topic to like a small little niche that, you know, doesn't develop. I think we've heard some alternative voices here, and when it comes to careers, both of students but also researchers as well as professionals, I think that's something to build up on. So I would like to thank you, thank the panel, thanks the audience for interacting, and that's been